Welcome to the Estate of Reality podcast. Join two of the smartest people in real estate as they talk about the reality of today's real estate world. It's nothing like TV. This is the real world. If you are planning to buy, sell, or invest in real estate, or if you are a real estate agent, this podcast is for you. Your hosts are Melissa Haley, broker for North Texas Top Team and CEO of Agent Advantage Coaching and Training, as well as Stephen Etzel, real estate broker, instructor, and owner of Stephen Etzel Real Estate Consulting. Join them as they talk about all things real estate. Subscribe today to catch all of the episodes.
Well, welcome everybody. I am Melissa Haley. I am here today with Stephen. How you doing, Stephen?
Absolutely wonderful.
Awesome. All right. So today we have a pretty cool topic to talk about. It's pretty closely related to real estate and it's important to everybody, even if you're not buying and sell a house. Right now, we're going to talk about property insurance. How does that sound?
What?
Property insurance. Everybody needs it, right?
That is true.
Everybody's got to have it. It's a good idea to have it. Even if your house is paid off, you should have insurance on your home.
Absolutely.
So, all right, here's what I'm thinking is going on out there in the world is, property values have been climbing like crazy, skyrocketing over the last 2 years, right? And I'm thinking that my homeowner's insurance for my house, I'm insured for a certain value based on, like the replacement cost of my house or how much the value of my house is. But what's happening right now if my house is worth a whole lot more than it used to be, and maybe I haven't talked to my insurance folks? Do I need to be worried?
Yeah. Well,
okay.
That's a simple answer right there.
All right.
All right.
Tell me about that. What do I need to be worried about?
We're going to kind of piggyback off what we were talking about prior with mortgage, because when it comes to mortgage, you got to have an insurance policy, but also if you don't have a mortgage, like you said, we got to have an insurance policy as well. Yeah. So insurance is a huge deal, especially when the values are going up and you're underinsured. That's the big issue. So in my mind, I would strongly suggest you get a hold of an insurance agent as soon as possible so they can at least take a look at your policy to make sure that if something does happen to your dwelling, that it is insured to cover, any repairs that need to be done or replacement that needs to happen. And we are coming up to storm season.
Right.
And so if you're underinsured, that means it's coming out of your pocket.
That's what I was thinking. I'm like, man, there was tornado sirens last week in the hood. And I'm thinking, oh man, the tornadoes are coming through my part of town. And that's kind of what made me think about it. Do I need to get more insurance? What happens if I do? What happens if I do have a claim?
Well, here's the other issue. I'll answer that one in just 1 second. Now, here's the real issue that's going to happen. If your mortgage company requires you to have replacement costs or a certain amount of value on that property and you don't have enough, they can also put forced insurance on you as well. So that's another issue that you want to go ahead, go out, talk to your insurance companies, get somebody. I've been looking, I'm an insurance agent as well. So I get a lot of people wanting to be requoted. This is kind of the requote time of year, if you will. Sure. This is when all the insurance premiums are coming up for, for renewals for the next year to pay out for the companies and so on. But, we're getting a lot of these files that are coming through that are underinsured. I saw one the other day for $100,000, underinsured. And being underinsured, your mortgage company not have found it now, but once they go to reconcile their their books and so on to find out, hey, where are you sitting, what needs to be done for your impound accounts and so on, they're going to find that it's underinsured and they're going to force you to do it anyway. So with all these tornadoes and all these hailstorms and everything that are coming through, if you're underinsured, what's going to happen is, you can make a claim. However, all the rest of it's going to have to come out of pocket. And if you have a huge claim on your roof, let's just say for $15,000, you're underinsured even to pay the deductible. That could be a serious issue. That's an out-of-pocket expense at that point.
Yeah, that totally makes sense. And you said a couple of things that were making me worried because, I know that if you don't have insurance and your mortgage company puts insurance on it, I think you called it forced insurance, right?
Yeah, forced insurance.
Man, I know when they do that, they get you the crummiest insurance for the most expensive price.
If you're used to paying $100 a month, it went to $300 a month. It went from 0 to 100 really quick. So they want to make sure that you are insured because that's their asset.
Yeah.
That's their collateral.
Right. Yeah, it's the collateral for the loan. Yeah, I mean, that totally makes sense, when you kind of think about it from that perspective. But let me ask you this, because what if I have, okay, I don't know if this would even ever happen, but what if I have insurance on my house and maybe I have, I don't know, $300,000 of insurance. That's what I have it valued at, but I really need to be at 4. Are you saying they just tack on an extra $100,000 second policy? Would it be a second policy?
No,
How does that
no, no,
work?
no, no. No, they would have to. No, I wish it was that easy. All right.
I'm thinking
uh,
that wouldn't be too expensive.
yeah, we wish that would be that easy. Trust me. As an agent, I wish it was that easy. Trust me. But the
Yeah.
whole thing is we got to rerun the policy. We got to make sure that the numbers make sense. Everything's risk based. And so if you're underinsured by $100,000, what's going to happen is they're going to have to reissue another policy and maybe add on other things to that policy as well, like other endorsements and other things that need to be added to make it equivalent to what you had at 300,000, but to make it at a $400,000 mark. And so you're looking at it going, this could be a long drawn out process. We did a quote the other day on a house. It took us about a half hour to figure out what their policy was to find something equivalent to it. However, to find something equivalent to it actually is going to cost about $2,000 more a year. That's another issue that we're facing. In Tarrant County and Western Denton County are the 2 highest insurance policies in the state of Texas, because the rates have gone up anywhere from 19 to 25% per policy because of the storms that are coming through. And so a lot of people are sitting around going, well, I mean, I'm paying $1,900 for my insurance premium. I don't really want to poke the bear, if you will, to find out if I need more or not.
Right.
Because likely, if you're at 50, 60, 100,000, $200,000 less than the value that's needed, that's going to raise your insurance premiums, $2,000, $3,000 a year at that point. We did one the other day. It went from $1,665. They're only insured at $265. Their actual replacement cost of the property was $425. The difference is $1,900 a year. It's up to $3,200 now.
More than
got
double.
to be insured. Exactly. It's got to be insured, though. That's the problem. And so
Yeah.
I'd rather have you shop it now than wait for the last minute to figure this stuff out, or the bank writing you a nasty gram.
Yeah. Well, yeah. And if they're not collecting enough money in your escrow account,
You're done.
yeah.
They're going to go ahead and they're going to float it for you, because more than likely the mortgage company will float it for you. But what that's going to add on is either a 40-month loan is what they're going to call it. And they're going to, divide it out over, if you owe $2,000 and it's short, they're going to divide it by 48 months, and they're going to add that onto your payment. Or they're going to say pay it all up front. So either way, you're going to have to pay. So you just might as well find out what it is, find out if the insurance company can save you money. Sometimes if we bundle the policies, we can save you money. Sometimes there's other options available out there that maybe they're running a special, that if you're in college, or if you're going to add another vehicle to it, or you got a motorcycle and a boat, whatever the situation is, that's what bundling is all about. So I'd rather go ahead and figure that out before it's too late.
Yeah, for sure. Because if they're going to increase my house payment to make up for it, even if I'm short on my escrows and they don't ask me for a fee up front, my house payment's about to go up, and I'm not going to know why, because I'm going to be thinking, if I had a fixed rate mortgage, why is my payment changing? Oh, your house payment itself's not changing.
Right.
Your escrow.
I don't change. T and I changes. Taxes and insurance change.
Yeah, taxes and insurance. And by the way, are taxes going down? No.
I wish we had insurance for that.
Yeah, no doubt. Absolutely. Yeah. I mean, I just think there's so much stuff for people to know and to think about on their insurance. And I think, it's like a set it and forget it kind of thing on your house. It renews, the mortgage guy pays it. You don't even pay attention to it. Mm-hmm. It's very out of sight, out of mind. Even on my car insurance, at least I get a bill or a statement that says, here's what's happening. And since I have to pay it, I'm paying attention. I'm not usually paying attention to my house because it's just in my house.
A lot of times your car premiums are every 6 months.
Mm-hmm.
So they come up for renewals anyway. So those are probably more shop than a home policy.
Yeah.
Most people make them roll, home policy, whatever. They leave it up to the insurance company to send me a bill. Who cares? I never see it. Like you just said, out of sight, out of mind. It's part of my mortgage payment. Boom, it's gone. And so now you got to really be proactive on this. And if you're not proactive on it, it's going to end up eventually could even cause a foreclosure in some situations.
Oh man.
If you don't have insurance on your property, what's your deed of trust say? they can
Yeah.
accelerate it, right? That means if you're not insured, that's a breach on your deed of trust. So even the mortgage companies can take, not only put forced insurance on it, but worst case scenarios, foreclose on the properties.
Yeah. Wow. And I don't think people probably know that. They're not thinking that. They're just
No.
like, we'll just pay it, whatever. Man. All right. Well, so if I have a policy, and I know it's getting to be the end of the year and everything, and some people might be just, planning to, figure out their bills and cut their bills or whatever for next year or whatever. But just because it's the end of the year doesn't mean my policy's up for renewal, right?
Not necessarily.
So when does my policy renew? Like if I was a homeowner, how do I know when my policy renews?
I strongly suggest, this is me, go back and look when it was issued.
Yeah.
Because homeowner policies go year, right? They go full years. So if I got it issued in February 1st of 2020, when's it due? February 1st, 2023. So, you always want to make sure you're keeping track of this. Call your insurance agent. They can reshop it for you. A lot of times they probably going to call you 60 to 30 days prior to anyway, to see if they can reshop your policies. And if they're on top of it, hopefully they can get you a better deal. Now, here's another issue that we're running into, and this is something that's, becoming a real issue, because a lot of the actual providers that we're doing insurance in our area are on pause. So like, give you an example, like one of the large insurance companies now, I'm not going to tell you who they are, but they're not writing any policies in the state of Texas.
Because of the number of storms we've been having and claims and all of that.
In certain areas, they're not, I'm not going to say the whole state, I'm going to say in certain areas, some of them are putting a pause on what they're writing and what they're not. And so that's also going to affect renewals. So a lot of times people say, well, I'm with X company, I want to stay with X company. Well, here's the problem with that. We run a quote on it and X company is not going to renew because they're putting a pause on it. And what just happened automatically, if somebody didn't run the policy for you or you didn't check, they would have dropped you at that point. And you would have not have known until you got the nastygram by the mortgage company to say, hey, wait a minute, you don't have insurance on your property. We're putting forced insurance. You need to go shop it. And then when you're going to go shop it, what's going to happen? Well, you could run into another situation where another company that could have given you a better deal has now put a block on that area, or they might have changed their policies and it raised the rates. So the best time to actually go shopping is when the competitors are out trying to get the business. And so, I mean, in all reality, November, December, January is when people are starting to shop their policies now to renew towards the new, I say, fiscal year, if you will, so they can, get that home policy in place, or else we're running into a lot of problems that, like I said, there's a lot of providers out there that are not actually giving the great deals that they used to as well.
So if my insurance, maybe I bought my house in like the summer, because a lot of people move in the summertime, right?
Yeah.
So I bought my house in the summer. I bought it in like a June or July. So my policy is probably going to renew every June or July because I'm buying it for a year in advance. But you think it's still a good idea to go shop it right now?
I say, this is my personal opinion, and
Sure.
I've noticed it's worked for me. I shop it about every 6 months.
Oh, really? Okay.
Things change all the time. What's the worst that can happen? It's a free quote.
Right.
It's like I tell my clients, when I tell them, hey, call me anytime. I don't care. I will shop it for you. I've actually shopped our car. I do it every 3 months for cars. And I've already, just for myself, I've saved, a couple $100 a year, just going in and quote myself real quick. And you'll be surprised. Sometimes they're running a deal that they didn't run 3 months ago.
Huh. See, I don't think people know that insurance companies run deals like that.
No.
That seems like an oxymoron. Insurance deal does not go together.
No, I mean, it's for real. Certain times of years might be different. A certain time of the year, I should say, could be different. They could be running different deals. They could be, hey, you have a different change in your situation. You might have a rental property now that you can bundle it together. You might have a newer car, whatever the situation is, there's ways that you can possibly get a lower rate. You just got to talk to your insurance agents.
You just got to have them do the work. Yeah,
absolutely. And you need to check. And I encourage everybody, check it every couple months. You never know what's going to happen. And you're going to get the refund back from the other insurance company anyway. Because people always go, well, I've already paid up for the 3 months. If I change insurance 2 months later, what's going to happen to the remainder of the money? Well, it's illegal for the insurance company to take the money that they didn't use. So they're going to refund you back the month prorated amount. And then you can use that and going forward. And eventually, obviously you're going to get it back possibly in a check or whatever it is. But you may have to pay out a little bit to get the policy going up front. But would you pay out a little bit and save a lot, or would you rather wait to transition and maybe get caught up in another situation. You go, oh, well, I just went into the other cycle. Now we're going on another 3 months. And if I cancel it now, it's an ongoing deal unless you're proactive at what we're doing.
Yeah. Well, and that deal might end. Like you were saying,
Exactly.
there might be a deal and it might end if you're going to dilly dally. You know, I think some people out there are like proactive on other things like credit cards, right?
Mhm.
I know some people that call their credit card companies and all the time, they're just like, hi, can you give me a better interest rate? What's the worst they're going to say is no.
Yeah.
I know some people that do the same thing for like their electricity because it's deregulated and they just calling around getting a better deal from a different electricity provider. I don't know why people wouldn't do the same thing for their insurance. It totally makes sense.
100%. And, you know, that's 100% agree with it. I mean, like I say, I shop mine about every, I don't know, 60 days. And you'll be surprised at what you see. I just shopped mine the other day. I kid you not. And I just saved $119 a year on a car insurance. Now, is that a lot of money? It's something.
It's $119 a year.
It's $119 a year. That's exactly right. So I mean, to me, that's something, you know, and
that's
you know,
at least one more good steak dinner, my friend.
That's exactly, or a tank of gas in my truck, either one of the two, right? So I mean, you're looking at it going, if I can save anything, I'm excited about it. And then, you know, and then, you know, I'm going to shop my house again. I'm actually quoting my house right now to get the best deal. But again, I've been running into situations, as FYI, I've been running into some situations where some of them are no longer giving the insurance in the area. And so, you know, it may take a minute or two to find one that's better off, but it's well worth it right now. I mean, I'm saving people on other, policies. I've been saving people $1,000 to $1,900 a year by just shopping for their homeowner policies right now.
Wow, that's amazing.
Absolutely.
Well, so I have a question for you, because one of the things you said was, you know, maybe you're going to buy a rental home or investment property and you can bundle it all up. You were talking about bundling policies, but I have a different question about rentals. What about renters insurance? I know that some landlords are like, you got to get renters insurance, and other landlords aren't as picky about it. And some of them want to see copies of your renters insurance. But I mean, do people really need renters insurance?
Yes, they do. 100%. I mean, if I was a landlord, which I am a landlord, I've also done a lot of property management. So I require you to get renter insurance. The biggest deal when it comes to renter insurance is, number one, it protects your personal effects. So if the house burns down and you have personal effects, the homeowner, you know, the landlord policy will not cover your personal effects. So you got to have something to cover yourself. Number two, it also covers the inside walls of the actual rental property. So a lot of policies are now adding to it, like broken pipes. So if anybody remembers the February snowpocalypse.
Yeah, Freeze-mageddon.
Yeah, Freeze-mageddon. A lot of those pipes that were breaking were rental properties, and some of their policies actually covered the broken pipes as well. So these rental policies are going beyond what you think they are. They're protecting the inside of that dwelling, and that's what makes it so important for not only landlords, but also for tenants as well.
Yeah, I know. I totally get that. And I feel like, you know,
I'll even go further with this. Not only personal, not even renter policy is important, but how about home warranties? That has to do with insurance too. So if you're looking at buying a house, you want to get a home protection or a home service contract, what we call them now, but you can get those for rental properties as well. So I encourage even homeowners and landlords to get that as well, to protect anything that goes wrong with those appliances.
Yeah, no, I totally get that. I'm a landlord too, and I have a warranty on all of my rental properties, because if something breaks, I don't want them calling me at 3 a.m. when something breaks. I want them to be able to call the warranty company and have a service person coming out there. Right. I mean,
$40 or whatever it is.
Yeah. I can't fix the plumbing anyway. We're going to have to call somebody. Let's just start with calling somebody who has a plumber.
Right. And, you know, and another thing that I think a lot of people overlook, and, you know, it sounds like it's not important, but it really is, especially if you own properties, life insurance.
Yeah. Well,
you know, I try to encourage everybody at least get a minimum policy that if something happens, all your bills will be paid off.
Yeah.
when you're owning real estate, in my mind, is a responsibility, not only as living, but also upon death is a responsibility to take care of your loved ones. And
Yeah.
so, when you have assets, you want to make sure that you pass those assets along, and also so they don't have the debt that's involved in it. So life insurance, to me, I've been getting more and more and more and more and more people calling for life insurance policies because of that fact as well. And that's a huge part of owning real estate.
Well, and I was thinking about it when you were talking about bundling all the stuff. You're like, get your house in there, get your car
Yeah,
in there, get your motorcycle, whatever, all the
everything up.
things. And yeah, I mean, go ahead and get your life insurance. If you don't have any, you don't have to get it from work. A long time ago, people would get it from their employer, right? And they got that employer package or whatever for their life insurance, but you can get that same coverage from your insurance agent, right?
Absolutely. They sell life insurance. Absolutely. And
Yeah.
the thing is, I mean, it's pretty reasonably priced. We just did a quote on somebody, 20-year term. Term life's always cheaper than whole life.
Term life is the cheaper way to go for sure.
Absolutely. Term life is just for the 20-year term. That's why it's so cheap, because it's not having cash value. But on the flip side of it, if something happens within the 20 years, it still pays out.
Yeah.
I mean, it's just one of those things. And so you could always renew it too, get another term if you live longer, whatever the situation is, but it's just there just in case. And we just did a 20-year. I just did one before I got on this podcast, did a 20-year term for somebody that was mediocre life, meaning they have some health issues, mediocre, they call it standard. Let's put it that way. And 20 years standard health. And it was $59 a month for $100,000 coverage.
Yeah, I'm sure it's partly on your health and partly on your age and
Absolutely
all of that kind of stuff for sure.
So age was 62, 20-year term, $100,000, standard health, $59 a month. Boom.
Okay. Yeah, it's very workable.
Where'd you go wrong?
And it's probably saving him, $30 a month because he bundled up. And so when you bundle all your packages, it doesn't really cost $59 anyway, does it?
Well, you can't really bundle the life with that per se, but the savings that you do if you bundle other things with could offset it to be able to pay for it. Let's put it that way.
Okay. Yeah.
So if you have a car, a motorcycle, a boat, a house, the savings that you would save on all that bundle would probably be more than enough to be able to pay for that life insurance policy.
Yeah. And if you have all that stuff, you definitely need more life insurance coverage.
Absolutely.
Pay all those things off. Well, so you were talking about if you're getting health and or not health, but life insurance, it's based on your health, right? And your age.
Yeah.
But I think that some people don't know the factors that go into getting a quote. Like, I think if you quoted me for a $300,000 house and you quoted someone else for a $300,000 house, they're both built in the same year in the same neighborhood, they probably wouldn't have the same policy price. Is that right?
Well, it depends.
Yeah, that's what I was thinking.
I'm going to be honest. It depends on what carrier you go through. Because some carriers now, even with auto, they're looking at your credit scores. You know what I mean? So, but on the flip side of it, it just depends on how long you've been a homeowner, what the loan to value ratio is of the property, how long you've owned the property. Because a lot of people have owned the property for 20 years. And they want a quote on it, or somebody just bought their home and they want a quote on it. So all these are deciding factors when it comes to risk.
Right.
That's why you have to ask the questions. Hey, how long have you owned a home? That's why they're asking these questions. What's your mortgage payment? Who's your mortgage company? All these questions add up to find out what the risk factor is for the actual insurance company.
Yeah.
Now, for the most part, they're not going to be much difference. I'm not going to, it's not like, oh my gosh, $1,000 difference or anything like that, but there could be a difference because it could also be a savings for age.
Yeah.
You might have a senior discount. You never know, right? You could have a college discount. You could have a occupation discount. Whatever the situation is, there could be other factors that come into play.
Yeah. And I think people don't know that. They just need to call and get their own quote, not just rely on what their cousin told them or whatever.
I hear it all the time. Well, my cousin's only paying this. Well, your cousin only lives in a condo. It's one bedroom. Your cousin lives in a one bedroom, a condo in and who knows where it's at. We never even heard of the city before, but you live in Dallas Fort Worth area in Tarrant County in a 4-bedroom, 3-bathroom house, 2,800 square feet. That's a little different.
It's a lot different. Yeah.
So you're looking at it going, you can't compare that to that. Let's put it that way. And
Yeah.
so, that's why you want to make sure you're calling professionals that actually know and how to, tell them everything. When they ask you, tell them the truth, tell them everything, and make sure that they do it thoroughly. And, if it takes a little bit of time to get a quote back, it's not because it's the system's slow. It means they're trying to shop it for you and give you the best deal. That's what it's all about. If
Yeah.
somebody gave me a quote in less than 2 seconds, there's a problem.
Yeah. Then it's like an algorithm. It just didn't really check your stuff.
Yeah, I mean, if I call somebody, they're like, yeah, I'll give you a quote in 8 seconds. There it is. No. I want you to look for, go to Allstate or go to, Safeco or go to, Elephant or wherever else you're going to go, Lemonade or whatever company that you're going to shop for, whatever the product is. I want you to do the best for me. And that's what a good insurance agent does.
Yeah. And it takes some time. So you brought up condos, and I think some people don't know that there is a difference when you have a condo versus, say, like a house or like even a townhouse. Like there are different types of insurance. So talk about that just a little bit about what makes it different and why it would be different.
Well, a house is a structure. So you own we don't insure land. That's what people don't understand. You never insure land. You insure the structure. So when you're dealing with a house, it's a structure on a piece of property or land. When you're dealing with a condo, it's a unit within a building.
Yeah.
And so you're looking at it more like an apartment more than a quote unquote house, which is I guess I should say freestanding structure. Let's put it that way. So a freestanding structure is going to have a lot different characteristics than a unit that's inside of a building. A lot of times the HOAs, which are homeowner associations, which are condos that are involved, that's where most condos have HOA, and that building is also insured for a certain amount. All you have to do is insure the inside walls. So it's more like a apartment or a renter insurance policy than it is a homeowner insurance policy.
Yeah.
And so they are two different things, and their pricing is two different ways. If you're going to insure a structure that's 3,000 square feet, a house that's sitting on a piece of property is going to be a lot different than insuring a room per se, because that's what you own, paint to paint with a condo, right? That is 1,000 square feet, because you only have to insure the inside walls and the common wall. That's all you're doing. So it's going to be a lot cheaper, yes, but it is a different policy and that agent must know the difference. A lot of times agents get confused with townhouses and condos.
Yeah. And I think too, people, they're like, well, my insurance is so much cheaper, but then they still have to pay their HOA dues. And part of their HOA dues is covering the insurance on the structure. Like
on the structure.
Because could you imagine if the roof blew off in a hailstorm, totally damaged, whatever, and you've got to meet up with your like 6 neighbors and everybody's dividing up their portion of paying for a new roof. Yeah. There'd be people like, I'm not paying that. And what a mess.
That's called reassessing.
Right.
So those homeowners got their reassessment fees. But, you look at it, and on the flip side, though, when you're dealing with condos and townhouses, that's what a lot of people get confused with. A townhouse is just like a single family dwelling.
Yeah.
You own the land plus the structure. A condo is completely different because you only own the unit within the building. So, you also want to be able to I've talked to people and they get those two confused all the time, and they don't quote them correctly. And those quotes can be grossly, way off the mark. So make sure you understand what you're quoting and explain to the insurance agent where you're at. They'll do research on it. Don't get me wrong, but you want to make sure that they have all the information up front so they can make their
well, we bought a townhouse earlier this year, and on the tax records, I guess it's listed as a condo. And so my insurance person ran me a quote, and she's like, here's how much your insurance is going to be. And I'm like, wow, that seems like a really good price. Yeah. And then I realized she had me quoted as a condo, and I sent her the HOA documents, and the HOA documents clearly said, do not get condo insurance. That's not sufficient. You need townhouse insurance, because this is how you're going to be, valued if something happens. And so when I went back and got it requoted, you're right, it was a lot more expensive. Way more expensive.
It's grossly more expensive. You look at it going, oh, what just happened here? Yeah, absolutely.
Yeah. So, the HOA documents were very clear. So once I gave my insurance person the information, they were able to, get that adjusted and get it taken care of.
Yeah, I had a condo one day down in Fort Worth. They called me for a quote, and they said, should I get flood insurance? you're 4 stories in the air.
Yeah.
That'd be a no. And they're like, well, what happens if the pipes break? That's called broken pipes. That's another insurance that you can get. That's called an endorsement, right? And
Yeah.
so basically that's why I call it flood insurance. So a lot of times people don't really understand what insurances go with what insurance as well. So that's something you need to really explain to these people. And,
Well,
and
sure.
a
And
good
I
insurance
think
should be able
I
to be
think
able to
flood
do that.
insurance is actually a pretty important topic because first of all, it's an important topic just to start with, because man, when a flood happens, it can be some significant damage.
Absolutely.
But we just had some recent changes. Do you want to talk about the changes now? Even if you're a landlord, you have to have now flood disclosures, flood zone disclosures. You want to talk a little bit about flood insurance and flood zones and all of that?
Absolutely. If you the best way to find out if you're in a floodplain is, us realtors can find out pretty quick because it's in our matrix system. But you go to FEMA.gov. If you go to FEMA.gov, just go to flood insurance rate map. And if you go to flood insurance rate map, you can actually put in the zip code and the address where the property is, and it will tell you what zone it is. If it's in zone A or V as in Victor, the actual insurance is required for flood because that's a 100-year less floodplain. So if you're going to get a mortgage, it's going to be required anyway. Now, if it's also in a 100-year less floodplain, now the new law, the new Senate bill that came out says that we have to now give a flood, I guess I should say disclosure, if you're leasing property, if it's in a 100-year less floodplain. So the landlord must give that flood disclosure to make sure that the tenants understand they're in a 100-year less floodplain, because that can affect their renter insurance now too.
Yeah. Well, yeah, because if it floods, somebody's got to pay for, well, like you said a minute ago, the structure itself, that's on the landlord, but your stuff's going to get wet.
Absolutely. 100%.
Your stuff
So,
inside is going to get wet, and you need to have that renter's insurance.
absolutely. And again, that will affect what your insurance policies are. Not only does it affect your renter insurance, but also could that also affect what you're paying for that area, because now the landlord has to add that to their premiums as well. So see what I mean? So everything goes up. It's all, it's a domino effect.
Yeah, for sure. And one time somebody was trying to explain the difference between, because you had said something about what if a pipe burst and that's not a flood or whatever. And they said, if it comes up from the ground, like maybe that might be a pipe burst, right? Like a plumbing leak or something. That's not a flood. But if the water's coming down from the sky and comes into the house, now that's a flood. Noah and his ark, the water was coming down and the water was raising up, and now it's in your house.
It's a good way to think about it right there,
Yeah.
And unfortunately, if it rains, it floods. So, that's why these FEMA flood maps change all the time.
Right.
So don't assume, we go out and take listings as real estate licensees all the time, right? And what are we always checking for? Flood plans. I can't tell you how many times I've asked somebody, are you in a floodplain? Well, it wasn't 5 years ago. Then I look it up on the flood map and the back of the property is in a floodplain. So, they readjust all the time. We just got to be aware of the fact. And down south, that's, now due to the Harvey Act, that came out when they had Hurricane Harvey come through, going through Houston and so forth, that whole place is rezoned for flooding. So you want to make sure, that's why our seller's disclosure notice is so precise, 500-year less floodplains, to make sure that everybody's aware of that.
Yeah, absolutely. Because, you can be in town. I guess that's the other thing to think of, is you're not going to necessarily just only need flood insurance if you live like on the lake.
Absolutely not.
No, you could be in town. First of all, in town, you might have a creek or something that's nearby anyway, or you might be near a lake. Sure, that's all great. But the flood maps are, changing partly, I think, because like you were saying, the flood maps are changing as the more it rains, the more it's flooding. But the more that we develop and we put in concrete, well, when it rains, it's not going to soak into the ground. It's going to hit the concrete. It's got to go somewhere. And the more as we continue to develop, the water's just shifting where it's going. It's got to go somewhere.
Well, that's living proof of what happened when we got that, 12 inches of rain, and look what happened in Dallas.
Oh, yeah. Yeah, for sure.
We were doing the backstroke down 35. So what does that tell you? We have like 10 feet of water on 35. Yeah. What was that telling you? Would that have happened 10 years ago? Who knows, right? I don't know. Yeah. But I do know that the floodplains are changing all the time. And due to the building, you're absolutely 100% correct. And our drainage. Yeah. The drainage sometimes can't support it. So like Houston, look at Houston. They get a little bit of rain. They don't have any drainage down there in some areas. So what do? They flood. And so, don't assume is a great way to think about it, Melissa. Don't ever assume.
Don't assume. Yeah. Because, the other one that I think people don't think about is when you first buy that brand new construction house, the grading and drainage is done so
Yeah,
that the
no
water has
kidding.
somewhere to go. But what do people do after they buy their house? They put in swimming pools, they extend patios, they put
Yeah.
in new landscaping, they build up retaining wall, they do all this junk that totally muckies up the grading and drainage.
That's exactly right. That's why you should get an engineer before you start doing that kind of stuff,
Yeah.
or at least get an engineer to look at it.
Yeah.
Some of that grading might look good to you, but not so hot to somebody that's a professional. So that's
Well,
good.
or it might look good to you, but not so hot to your neighbors. It's all rolling off into
It's
their
all rolling
yard.
to their yard. Yeah, that's exactly right. This is great as long as all the water goes over there.
That's
But
right.
but unfortunately,
my house. I don't know what's wrong with you, Stephen. You're my neighbor. I don't know what's wrong.
yeah, you got a swamp. Yeah, but but the thing is, you got to make sure that seek professionals is probably the lesson to learn there. So
Yeah.
you never know until it rains. I mean, I can't tell you how many times I've asked people, do you have a drainage problem? Well, we haven't had one for the last 5 years. Well, we haven't had rain in the last 5 years either, so let's see how that's going to work out for you.
Yeah, we've been in a drought. Hello.
Yeah. Yeah.
Oh,
Any
man.
leaks in your roof? Hasn't rained in 5 years. Okay. So who knows, right?
Yeah.
So yeah, you're right. That's why
Oh,
inspections
people.
are so important. And one thing I do want to add when it does come to this insurance policy that everybody should totally be aware of. If you're buying a property, if you're a real estate licensee, buying, selling, anything, get a clue report.
Yeah. It's funny. I was literally just thinking that same thing because I was like, yeah, but what if there is damage and how do you know?
That's exactly
Well,
right.
the clue report. So what's clue report? What's clue stand for?
That's a great question because I forgot.
I think it's comprehensive loss underwriting
loss,
or something.
Underwriting. Yeah, that's what it is. Comprehensive loss underwriting something.
Yeah,
All right, but I do know that we can do a clue report for free. There you guys go.
Yeah.
All right. So even though we don't exactly know what it is, I can tell you what it does. How about that? All right. It is a comprehensive report, and it is something that a insurance agent can very easily do. All we got to do is go into the system, run a quote on a property, and it will actually come up with all the information. It's that easy, everybody. So they're free for you guys. I encourage every licensee to get a clue report. I encourage everybody before this allows to get a clue report, because what happens is it tells you what the claims are on the property.
Yeah.
And unfortunately, you have people, such as sometimes sellers do not know, or they may be hiding something. I'm not saying they are, they're not saying they are, but I am saying that we should be verifying. That's what meticulous means, right? Verify, verify, verify.
Yeah.
And so if you do a clue report and it says, hey, look, there was a claim on the property last year. There was roof damage. It'll tell you what it was, when it was, and the amount that was paid. So they got a $10,000 claim on the property.
Right.
Well, you go out there, you get a roof inspector to hop up there. It looks like somebody got hit with a ball beam hammer. So what that just tell you, there's hail damage, and they put on seller's disclosure, no roof damage. Well, you look at the clue report and say, hey, you made a claim on it last year. Wait a minute here. That's telling me that somebody went dizzy. That's what that's telling me. They did not fix the roof. So that could be a negotiation tool as well, because nobody wants to buy a roof that is, obviously it needs help. And,
right.
When it comes to roofs, that could be insurable, but not in good shape too, by the way, or it can be totaled, or, whatever the situation is, you want to make sure that if they haven't made a claim in the state of Texas, you can make a claim up to 12 months. All right. So let's say they had hail damage 6 months ago and they haven't made a claim yet. They still have the right to make that claim within the 12-month period of time. And so we got to do something about it and make sure you obviously get the roof fixed before you transfer the property. And in some situations, now here's another little bad scenario that can happen to you. If you're buying a property, the insurance company will bind the policy for the sale of the property, but they do have the right to go out and inspect it within 60 to 90 days and rescind the policies.
After closing?
After closing. That's called rescinding the policies. And so what happens is I've heard a lot of people run in this little situation right here where the insurance company will bind the policy based upon, they're going off the representations, which is what people are saying,
right.
Hopefully we're not lying. They're not warranties. That would be a promise, right? They're just representations. So that's why they have that rescind in the actual policy. They'll go out there, either they'll send somebody out there or they'll drone it or whatever they're going to do. The next thing you know, they look at the roof and they say, hey, wait a minute, we should have never bound this policy. We're going to rescind the whole policy, or we're going to rescind the policy and not cover the roof. So that means you're going to have to fix the roof before they'll put the whole policy on the actual property.
Man, and then your mortgage company is freaking out.
Then your mortgage company gets involved and goes, whoa, 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 wait a second here.
Yeah.
What'd you just say? And so next thing you know, you get that nasty gram again, and they're either going to force insurance on you, they're going to make you fix the roof or do whatever necessary to get that insurance policy on there. That's
Yeah.
exactly.
Yeah. So word to the wise, get the clue report before you go to closing.
Be proactive.
Yeah, absolutely.
And you can do that. You can do that for commercial property too.
That's good to
Commercial,
know.
residential, and it goes back 5 years, standards 5 years, but you can get an extended one for 7 years. A lot of people don't know that. But whenever we're doing commercial, I'll do a 7-year on there because obviously they're there longer, you know what I mean?
Mhm.
So a lot of times you'll have more claims on possibly an insurance building than, a commercial building than maybe a residential. 5 years is good enough for residential. And it should be enough to at least give you some good idea what the property is all about.
Yeah. Yeah, absolutely. Well, cool. Well, do you have any other insurance stuff you want to share with everybody that's listening today?
The biggest thing that I can tell you about insurance is shop it. And right now it's changing, everybody. So you want to make sure that you get in on it, get a good quote on it. And like I said, a lot of these insurance companies are not going to either renew or they're not going to give insurance in the areas.
Yeah.
So you want to make sure you get in and a good policy. So you might quote unquote be grandfathered in until, maybe you can shop it next year and something better might come out. There's new insurance companies that come out all the time. And so that's another thing that a lot of people don't know. Everybody just thinks of the big guys, like Farmers or Allstate or this or that or this, or, the big people. That's not necessarily the best either. That's what people don't realize. I was talking to somebody the other day and they said, well, if they're not a big company, I don't want to deal with them. Well, sometimes the smaller companies are just, if not better than the bigger companies. So, do your research on them. See if they have any complaints against the Better Business Bureau. Read Yelp complaints, whatever the situation is. And a lot of times your insurance agent can find a lot of information on these companies that can send you on what their payouts are. The biggest thing when it comes to insurance is when you call somebody will pick up the phone. If you have a claim, they pay out the claim in time. That's what we're all looking for, right? It's not necessarily that they got a name up. The name means absolutely nothing. That means absolutely nothing. What means something is if I pick up the phone, they answer the phone and say, hey, we can make that claim out and pay it out in 5 days. That's what everybody wants to hear.
Yeah.
And so,
and the customer service part. Yeah. Answer the dang phone.
Yeah. Nobody cares. And in fact, I'll be honest, some of the bigger companies, I've been on the phone for 40 minutes trying to get somebody, what I mean? I got a lot of smaller insurance companies. I pick up the phone, they answer it on 4 rings and take a picture of the vehicle. Next thing you know, I got to check in the mail in 5 days. And that's the way it's supposed to be.
Yeah.
Or they'll have an adjuster out in 2 days or whatever the situation is. So, that's one of the biggest concerns that I have is don't put a whole lot of merit in a big name. Just don't do it.
Yeah.
Look at the quality, look at the track record of the business and find out what the payout is, how long it takes them to pay out and what the coverages are. And make sure that's how you'd make sure they're reputable or not at that point.
Yeah, agreed. Well, good stuff. Awesome stuff for today on homeowners, property owners, insurance. Lots of good stuff. So everybody, join us next time on the Estate of Reality podcast, where we talk about all things real estate, and it's the real reality of the real estate profession. We'll catch you guys on the flip side.